I love the idea that in a mineral commodity where I have a project under development, that I can know what price I'm going to sell my material at for 20 years and how much of it I'm able to sell. That's a luxury that I have not had as a commodity speculator for 50 years of my life. Uh, I mean, this is, I think this will become the norm 20 years out in a lot of commodities. I think the lithium market will develop this way. I think the rare earth market will develop this way.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our commodities guru, Rick Rule. Rick, thanks for coming back on the show.
Pleasure, Steve. Thank you for having me back.
Yes, sir. Let's go ahead and open it up. Anything on your mind right now? Anything that is current in the news that you want to get out to listeners?
Well, I think a few things. It is funny how many people, particularly those who have been attracted in the last year and a half to the precious metals market, experienced so much trauma around the volatility in metals pricing. An example would be everything that was true with the silver narrative at $100 was true at $20, except at $100 it wasn't cheap. At $20 it was. It's interesting, Steve, that you and I talked about silver when silver was at $20 an ounce and had very few listeners. We talked about silver at $100 an ounce and we had a lot of listeners. It would appear that newer speculators in particular require price action to justify narrative. The problem with that is that when the price action has already occurred, the narrative is worthless. It's interesting, too, that people who loved silver at $100 an ounce can't stand it 3 weeks later at $67 an ounce. Now, I would suggest to you that silver, if the narrative is true, is substantially more attractive at the lower price than it was at the higher price. And I would suggest that the problem with most speculators in the market is that they are very good at emotion and very bad at math. I was pretty certain, Steve, when I announced publicly that I had sold 80% of my physical silver, that I had done the right thing, given the amount of hate that I received online, particularly given the fact that about 95% of the haters responded to the headline, never having listened to or read the interview. It's interesting now that some people have suggested that I was pumping silver at $20. I guess I was. And dumping silver at $75. I guess I was. When one buys a position because one thinks it is underpriced, one is wise to sell a position when his goals are obtained. I guess I should feel pity for those who criticize the concept of buying low and selling high. But the point of places like the Rural Classroom and the Rural Symposium and this discussion that we're having today is precisely to teach people to buy true narratives when they're out of favor and take profits when those narratives come back into favor. And this isn't a discussion that should relate simply to silver. All capital intensive cyclical businesses like natural resources exhibit exactly the same characteristics, albeit in different markets. The truth is that in these markets, if you are not a contrarian, you are going to be a victim. I believe, Steve, as I've stated on your show number of times, that the primary determinant of precious metals prices over time is the depreciation of the purchasing power in the US dollar and real negative interest rates on savings. I continue to believe that's true. I continue to believe that the US dollar, which has lost, by the way, over 90% of its purchasing power since 1913, 97% to be exact, will lose 75% of the remaining 3% of its purchasing power over the next 10 years. I believe, too, that the nominal price of precious metals, gold and silver, will likely, but not necessarily, mirror the decline in the purchasing power of the US dollar, which is to say, over 10 years, I expect metals prices to be not merely higher, but substantially higher. That notwithstanding, in my speculative account, which is where I held my silver, the reason that I bought my silver is because I believed it was oversold at $20. The reason I sold my silver is I believed that it was overbought in the near term at $75. And I thought as a speculator that reallocating silver, physical silver cash, to silver stocks meant that if silver just held the $75 level over 12 months, the stocks could be up by 50%, but silver by definition would have gone nowhere. The idea that it's hard to explain that way of thinking tells me that a lot of speculators have a lot of soul searching to do and a lot of education to add.
Okay, you're taking this exactly where I wanted to go. So, yeah, I've been getting the same thing, seeing the same thing. One thing that's wonderful about having a podcast is you get to see sentiment in real time, using outlets like X and YouTube and what we're doing now. The physical silver bet, and we did the same thing. We trimmed some physical silver, we trimmed some physical gold, and kind of parlayed that into some of the gold and silver miners. We have earnings coming up here. A lot of them are coming due February 18th. So in the next few weeks, I think some of them are coming in March. Do you see that re-rating coming in that quarter? In other words, summarizing Q4, or do you see it taking maybe 6, 9, 12 months?
It wouldn't surprise me to see a response in this quarter, but I've learned that if I have a 12 or 30, 12 month, or for that matter, a 36-month horizon, the surprises that I see in the 2 or 3 month time frame are always pleasant. If, by contrast, I shorten my expectation period, often the surprises I have are negative. Since I prefer positive surprises to negative surprises, and since I can't alter the market, what I do is I alter my expectation. If I think rationally that something should take 2 or 3 months, I try to allow it 18. And it's amazing how pleasant my life has been since I began to accommodate my expectations to reality.
Okay. We could have a little surprise, but as always,
Steve, there's no doubt there will be earnings surprises. If you read the research from the major Bay Street and Wall Street firms, their gold earnings estimates are based on $3,200 gold. If you're selling the stuff for 45 and your earnings estimates are predicated on 32, it's kind of hard not to have a surprise. Similarly for silver, I looked at a bunch of the Bay Street estimates and they're based on $42 silver. Guess what? You sell it for 67 or 70, it's going to be really difficult not to beat an estimate predicated on 42. Whether or not this is baked into the market is a very different question. What will happen, I think, if you see flat silver prices, is that you'll see the earnings estimates become more realistic 12 months out. I think you're seeing either false pessimism or conservatism from researchers, those few researchers in the silver business who have been consistently wrong for 20 years on the long side, and now they're wrong on the short side.
Okay. On your recent article that you wrote in Substack, got to give a shout out to your Substack, by the way. If you guys are part of my free newsletter on Substack, I'll put a post for this interview and I'll link Rick's article in there. Well worth a read. You did it on South America. And so you went into each of the countries down there, the companies that you like in each of those countries. if you had to put maybe the top 3 countries that you're most bullish on in Latin America, which ones would those be?
If I had to pick 3, it would be Chile, where I have the best experience, the best infrastructure, the best historic regulation, and a change of government away from the left to the center. Brazil, which I think has the most spectacular geologic endowment in all of South America, including Chile, but much more sociological and political and infrastructure challenge. And then what I hope I see is the rising star, which is Argentina. Tremendous geological endowment, in fact, a tremendous economic endowment generally, but one where the Peronistas have, I have to give them credit. Wrecking an economy as great as Argentina's was quite an accomplishment. At the end of World War II, Argentina had GDP per capita that was greater than Canada's.
Wow.
It took real skill to take an economy that was more prosperous than Canada's and cause it to compete with Peru's or Ecuador's or Colombia's. Only the Peronistas, only the socialists could destroy an economy that was as vibrant as Argentina. But in the near term, that appears to be over. People have made a lot over the fact that Argentina's liquidity, some of Argentina's liquidity came from the United States in the form of a $40 billion swap. Those same critics don't note that that swap has been paid back, paid off. If Argentina is allowed, if the Argentines allow themselves to develop the tremendous copper endowment, as an example, up at Vicuña, and the oil and gas endowment at Vaca Muerta, if they unshackle those great champions of Argentine agriculture on the Pampas, the economic miracle in Argentina will be absolutely spectacular. But remember, Steve, that I began that sentence with if that occurs. But if you asked me for 3 countries, and the 3 countries would certainly be Chile, Brazil, particularly the Carajás, Para state, and Argentina.
Okay. Chile, you like their better politics, Brazil, geology, and Argentina, geology and politics.
Make no mistake, I like the Chilean geology too. It's just that Chile has had policies in place that have allowed us to exploit that geology for 50 years. It's a more mature province. It is still a spectacular copper province, spectacular geology, spectacular human resources, spectacular infrastructure, but it's mature. It doesn't have the same unexploited potential that either Brazil or Argentina has.
Okay. Oh, do you mind turning your volume down just a smidge?
Yes, sir.
We're getting a little bit of an echo.
Yep.
Okay, thank you. All right, let's move on to oil here. I'm going to share my screen, and we've got spot oil here, WTI. Boom. All right. It looks to me, as a bit of a chartist, like oil is starting to break out. When we look at some of the oil equities, if we go, here's just an easy one, XLE, the oil ETF, its biggest components are Exxon and Chevron. This thing just looks like a train that has just left the station and not stopping. Have any insight? Have we finally reached the point in oil equities here where what you've been talking about for the last year and a half is finally coming to fruition? We're just breaking out?
I think the market may be anticipating what I've been talking about.
Okay.
What I've been talking about, well, it may be able to be expressed in charts. I just don't know how to do it, so I'll leave that to you. My bullish case for oil has been that the oil and gas industry worldwide has been underinvesting in sustaining capital to the extent of $1 billion or $2 billion a day. And that in 2027, 2028, 2029, that we would begin to experience supply deficits. We are not experiencing a supply deficit at present. We are experiencing dislocations and the perception of political risk. The market is either reacting, which is to say, trading news based on Venezuela, events in Iran, and the increasing effectiveness of the U.S. embargo on Russian oil, or it's anticipating genuine production shortages that I don't think will occur for 2 years. I'm not sure which. I can tell you with regards to the XLE, when you and I began to talk about it 6 months ago, it was simply too cheap.
Yeah.
The oil and gas equities were selling at a substantial discount to the net present value of their free cash flows at $60 oil. So the oil price didn't need to go up for the equities to go up. They just had to be a little less hated. This chart suggests that they are now substantially less hated.
Okay. I also want to pick your brain here on platinum. We had a kind of a moonshot in platinum. We were talking about platinum for years, and just dollar cost averaging in down here when it was $1,000 an ounce, and we just had a run up almost a 3x, come back down to now about a 2x. Just by luck, I interviewed a guest, Tony Greer, and he was telling me that, this is a far more risky bet than I'm giving it credit for. So I ended up going to what you call the point of no concern up here within a day or two before we had this precipitous drop. What do you see macro right now going forward for platinum and palladium?
No change. I think you saw a market in platinum that was a circumstance where the market move justified the narrative, much like silver. And the consequence was that you had momentum traders and I guess the easy word would say morons. And the market got overheated and needed a rest. Once again, if you believed in the platinum narrative at the top of that chart, you got to like it a lot more here.
Yeah.
It's cheaper and hence truer.
Okay. Do you see a possible re-rating coming with some PGM miners like you see coming from precious metals miners?
I suspect that's the case. There are no blemishless precious platinum miners, to my knowledge.
Yeah.
You have real political and social risks at the big ones. There are a couple developing platinum stories, Bravo being one of them, Ivanhoe being the next, that probably have less warts associated with them, although Ivanhoe has its deposits trapped in South Africa, which has its own political challenges. What Ivanhoe sidesteps is the fact that it's a highly mechanized mine. Robert Friedland and his Japanese and Chinese partners had the courage to invest well over $1 billion at Ivanplatz, so that's hugely mechanized. They have not substituted labor for capital, but rather put the capital in place. So the social unrest that the rest of the South African mining industry has, where the laborers are grievously underpaid, but where they can't be paid more because the mine's been starved for capital, doesn't apply to Ivanhoe. They just have every other risk in South Africa: corruption, crime, all those type of things. The normal, everyday mining risks.
What do you see with their Plat Reef? Like, so when you say mechanized, they're not sending these miners down in the holes like you were describing for Sibanye, right?
Yeah, the traditional underground platinum mine in South Africa is a truly fearsome place. You're sending people down, 4, 5, 6,000 feet deep into the earth. You have not invested in mechanized mining because the South African government has said to you several times that they believe they ought to own the mine. So why would you invest $1 billion in upgrading it in time for the ANC to steal it? The consequence of that is that the workers are unsupported by capital. They can't afford to pay the workers more because the workers' productivity is constrained because they're using picks and shovels rather than mechanized mining businesses. The workers need to be paid more, and they can't be paid more. which is really truly between a rock and a hard place. Two places at Anglo-Platz with their big open pit, Maracane, and Ivanplatz at the Flat Reef have taken the bull by the horns, taken the risk to put the capital in place, pay the workers much more than living wages. The consequence of that is that they pick the cream of the crop from among the workers. They can go to work for in some underground mine and make $700 or $800 a month, or they can go to work for Ivanplatz and make $3,000, $3,200 a month. Guess which they choose. Um, and we'll see how that works with the rest of the reality in South Africa. I mean, South Africa would seem to be very, very, very gradually improving. The worst aspects of the revolving power shortages around Eskom seem to have been addressed. The most egregious forms of official sector corruption, the Gupta era, corruption would now seem to be down to a dull roar as opposed to a deafening roar. So if I had to guess, I would suggest that South Africa is beginning to improve. God knows it has a long way to go.
Yeah. Okay. Okay. And you're grouping platinum and palladium kind of in that group because
I am.
Okay.
When one gets substantially ahead of the other for a while, fabrication technologies shift from the expensive one to the cheap one. Cure prices, high prices always being the cure for high prices. The wild card, of course, and I think part of the recovery in the platinum price, the PGM price, has to do, I think, with the fact that the Russians don't have any material left to dishoard.
Okay.
I remember in 1990, the last time the Russians needed money, the platinum price collapsed because the Russians sold the only thing they have on the shelf that could generate hard cash. And for the last 4 years, they've had a different need for hard cash. In 1990, the selling ended when the Russians ran out of platinum, and the price rebounded nicely. And I suspect that part of that chart that you've seen, at least the beginning part of that chart, has to do with the fact that the Russian cupboards are probably once again empty.
Okay. Okay. What are you most bullish on right now over the next 12 months? You mentioned gold miners, silver miners, oil. What has your major focus right now?
The commodity I like the best is probably uranium. In the structure of the uranium market. Now, the uranium juniors are, I think, pretty fully priced.
Yeah.
They've had a pretty good year, but you are starting to see the term market in uranium reflect the tightness in supply. And there's no way around that tightness in supply. At the same time, you're seeing more and more of the volume in the market go from the spot market to the term market. And it's tough to get price discovery in the term market. It doesn't show up. It's opaque. But the market would appear to be much, much, much firmer. The opportunity is that the attitude, the mood for speculators is set around the spot market, which is a false perception. Most days, the dollar volume in the Sprott Physical Uranium Trust is substantially larger than the dollar volume in the spot market. So the spot market has become the spot market. But that isn't reflected in investor expectations. That's a wonderful set of circumstances. I continue to believe that on a risk-reward basis, Cameco is better than the juniors. They have material that they regard as waste that everybody else would call ore. And they are the fully integrated producer. It would appear from the production accounts that Kazatomprom may have begun to solve their operational problems. I haven't repurchased my Kazatomprom myself because I was dismayed by the amount of the human talent that I saw at Kazatomprom that left the company. And I couldn't understand why that was. When I'm confronted with that big an unknown, I usually sell my stock, which is precisely what I did at Kazatomprom.
Okay, so you're seeing more stuff coming here for uranium. I'm going to share my screen again, and one thing I've noticed here recently. So here's SPUT.
Yep.
the Sprott Physical Uranium Trust, is they have been buying boatloads of uranium over the last month and a half or so. Here's the spot price, and now the term contracts today are 89, so going 12 months out or more. The cheapest term contract that's getting signed is $89 a pound, or at least that it was that last month. It shot up here to 101 and then came right back down. And as a trader, I just couldn't help myself. Took a little profits here in spot and then bought right back in a few days later. What are you seeing the discrepancy here between what we're seeing on the screen of the spot price yanking up? Do you think that's from spot?
The easiest way to say is I don't know.
Okay.
I think it may be traders accumulating material in the spot market with the anticipation of trying to profit in the term market. I mean, it may very well be an arbitrage, but I don't know that to be the case.
Okay. Okay. All right. But over the next 12 months or so, you're more bullish on uranium than the other
I mean,
commodities.
listen, I love the idea that in a mineral commodity where I have a project under development, that I can know what price I'm going to sell my material at for 20 years and how much of it I'm able to sell. That's a luxury that I have not had as a commodity speculator for 50 years of my life. Uh, I mean, this is, I think this will become the norm 20 years out in a lot of commodities. I think the lithium market will develop this way. I think the rare earth market will develop this way. But right now, only the uranium market has. And the idea that I could construct a cash flow model around, say, NextGen or Paladin or Denison, where I know how much material I can sell and what I can sell it for, and the fact that I can sell it to a credit grade counterparty, not to a semi insolvent trader, that's of huge benefit to me.
Yeah. Yeah. Okay. And that's something that we've been talking about for the last couple of years, and we're starting to see it come to fruition.
Yep.
Okay. All right. We're going to get into the portfolio with premium subscribers. Before we go, I want to talk about Boca Raton. We got that coming up. It's going to be July 6th through 10th this year out in Boca Raton, Florida. This will be my third conference, I believe, and I'm looking forward to it. What can we expect at this year's Rules Symposium?
Well, let me say before I ask your concurrence that I believe it's the finest natural resources investment event in the world. It's gone on for about 30 years. We've tried to make it a little better every year. You do that for 30 years, it ends up being pretty good. I thought last year was better than the year before, and this coming year will be better than last year. Every year we make it a little better. What do we do that's different? We have great big picture thinkers, people who tell you about the way the world is, not the way that popular media or Congress would like you to believe it is. I think that's important. I like to say, or I like to think at least, that we set the record straight. Last year, we had David Stockman criticizing the Department of Government Efficiency, telling a whole bunch of people that the Republicans and the Trump administration would not cut spending, that they were transactional political animals. Were we ever right? I wish we were wrong, but were we ever right? And the market turmoil that we have experienced over the last 12 months is testament to just how right we were. Had you participated, you would have had, as you and I did, a great year. So we're better at the big picture. But we're even better than that where the rubber meets the road. We have analysts and portfolio managers who have been making money in precious metals and natural resources for 30 or 40 years. Other conferences have some recycled auto analyst or retail analyst, somebody who failed in 3 or 4 vocations before they came to natural resources and precious metals. We have people who've been in the space for a very long time. We have exhibitors who are personally vetted by me. If you're a public company, you don't get on my floor if you're not in my portfolio. That doesn't, sadly, Steve, guarantee that every stock I own goes up, as you've doubtless seen, but it does guarantee that every single exhibitor has been vetted. At almost every other conference I know, the qualification for admission is a check that cashes. not a very stout test. We have the living legends, people who have built multi-billion-dollar companies from scratch, who tell you how they did it, tell you what they're working on today, and how the lessons that they've learned can make them and you better investors. We're doing a couple different things this year. We're having the investor legends, investors who have made money investing in natural resources for 30 or 40 years on a panel, telling you how to become a better natural resource investor. And better yet, we're having future legends, young people, or at least young compared to me, who have had a couple of successes, but who have not yet acquired the stature that the living legends have. People that have the legs to get you through the next 20 years in resources, unlike the people who made you money for the last 30. And finally, whether you attend live or via live stream, you have access to the recordings for a full 12 months. You're going to need them. We're going to give you more information in 4 days than you can absorb in 4 days. So you're going to have to review the recordings, which nobody else seems to do, again and again and again. Finally, if for any reason, live or live stream, you don't think that you got your money's worth, I give you your money back, full money back guarantee. Now, 2 more notes, Steve. We are fairly close to selling out the live performance, something we haven't done for 20 years. If you think that you would like to join us live, which I would encourage, to get the full benefit of the conference, you need to see what goes on behind the scenes. You need to have discussions with your fellow attendees during the coffee breaks, or better yet, at the bar. If you intend to do that, you need to act quickly, because we will sell out this year. And if you do that, you need to get in the room block. We sold out the room block 3 times. We've managed to get the hotel to extend a 4th discounted room block. By the way, if you went to rent one of those rooms today, they cost you $1,200. We turn it to you for $340. So if you're going to come, by all means, get involved in the room block. Now, we have, from all practical points of view, an unlimited attendance availability live stream. If you're unable to come to Boca, like people from 33 countries last year, you can attend the conference via live stream. We have a dedicated live stream staff availing you of all of the parts of the conference that are recorded, and also special online interviews that aren't available to anybody else. We do a good job there, and that doesn't have the same time pressure. But we can't, of course, accommodate our live stream customers, as an example, on the attendee boat cruise or in any of the social functions at the event. So while my preference would be those who are able should attend live, those who are unable should absolutely positively check out the live stream. And as I say, absolute unconditional money back guarantee. I'm delighted to say, Steve, last year, out of 1,400 live stream customers, we had 3 refund requests. I don't know what that is, 1/3 of 1%, 1/4 of 1%.
About that, yeah.
Very good rate. But that notwithstanding, it's there.
Awesome. I love it. I've done 2 live streams and now 2 in person, and there's nothing like being in a hall with, 14 other people, 1,400 other people that are exactly like you, that are looking at these mining companies. You're just immersed in, when you go to a family dinner or friend dinner, no one's talking about this stuff like people at
one other thing, Steve. We are finalizing arrangements after 10 years of absence to have a very, very, very high quality oil and gas guy come.
Ooh.
Somebody who has made me literally tens of millions of dollars over the last 30 years. And he's not going to talk the boring stuff like Rick Rule talks. He's not going to talk Exxon, Chevron, Occidental, Suncor. He's going to talk about frontier oil and gas exploration, the most unloved natural resource investment speculation in the world. So those of you who have the courage to work hard, dig hard, invest for the long term, in search of 20 baggers or 30 baggers, this is for you. Frontier oil and gas exploration in countries that you can't pronounce by a guy who has done it successfully really successfully, for me, for 30 years.
I can't wait. It's going to be awesome. Okay, we'll put the link to that down below. I would love to meet you guys in person. That's my favorite part of these conferences, is meeting you and shaking hands with you and taking pictures and get to meet you in person. Also coming up this Thursday, you and I will be in the Rule Classroom Plus, taking Q&A questions for anyone that's there. So anyone can watch the live stream with you and I to ask you a question on Thursday. You have to be a part of the Rule Classroom Plus, and we'll put a link to that down below as well. Rick, as always a pleasure. Thank you for coming back on the show.
My pleasure. Thank you.
Thank you for tuning in. Rick and I did a special bonus interview on Substack of my personal portfolio. We looked at every commodity I'm invested in, every ETF, and every company. Rick gave his comments on each one, and after hearing what he had to say, I think I have a little rebalancing to do. If you want access to that, plus a weekly charting video on my personal portfolio and updates on the stocks I'm buying and selling with real-time trade alerts, head over to Substack and join us. The link is down below in the description, or go to stevebartonmoney.com and sign up there. And if you're already a premium subscriber, check your inbox. The next video with Rick is waiting for you. Thank you so much for your support. Have a wonderful rest of your day.